Hello and welcome to today's edition of The Final Bar. We're going to open up the Final Bar library, share with you one of my favorite books, The Dow Jones Averages, and share with you some of the lessons I've gotten from it. Also a pro tip, we're going to spend some time today on the member dashboard, breaking down how to set up that page to help you follow the markets very, very well. We're also going to recap the market environment, tech and materials, communication services, all rallying pretty good on a follow-through today, day on this snowy Monday in Seattle. Ladies and gentlemen, this is The Final Bar. Hello, everyone. Welcome to today's edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com. Please accept my humble apologies. This is my home office because we have Snowmageddon. We have a raging snowstorm here in Western Washington. Most of the StockCharts TV family is at home trying to stay safe, but we were hoping to get this out to you for 4 p.m. Eastern today. So apologize that you were experiencing my home office, but could be worse, I guess. But today what we're going to do is break down the market activity. So we've got a nice follow-through day to the upside. We've got leadership from materials, technology going here into the afternoon. So we're going to look at some of the individual charts. But really exciting, we're going to open up the Final Bar library. This is a segment where I take some of the books that I've read, share with you how you can apply them to your own investing, your own trading. So we're going to talk about the Dow Jones Averages, one of my favorite all-time books. As an investor. Also a pro tip segment, we're going to break down the member dashboard, which has become one of the main tools on StockCharts.com that I actually use. So I hope you'll find it helpful as well. Before we get to all of that, though, I did want to highlight the events coming up. Next week on the 15th, we have Katie Stockton. After that, on the 16th, we have Doug Bush. Those are both two fantastic, very knowledgeable technical analysts. We then have the Canadian technician Greg Schnell on January 21st, Greg Harmon on January 22nd. Then we will be sharing our 2020 market outlook. This is where me and a number of my fellow StockCharts contributors are going to share our perspective on what we're seeing, what we're hearing, and what we think for the remainder of the year. So you're not going to miss that. Jot down January 22nd. We, however, are going to get on to the market recap. So the idea here is we have materials, we have technology, and again, we're about midday, a little maybe afternoon here, 2 p.m. We're recording this on Monday. So, some things could happen going into the close, but at this point, you've got leadership from materials. It's sort of unusual because materials have not been one of the places to be. It's been one of the relatively weaker parts of the market going back over the last couple months. Freeport-McMoRan in particular, with a nice run today. We have technology, which is no surprise. That's been a pretty consistent place of leadership. And then industrials, communication services. Down at the bottom, we have energy. No surprise there because it's been relatively weak for the longest time. But healthcare at the very bottom. So healthcare has been certainly a frustrating place. Let's bring up that chart very quickly here. So, you have a sell-off in healthcare today. This is starting with today's sell-off going into the afternoon. This bearish divergence or this non-confirmation is looking more and more like a non-confirmation. I've mentioned in the last couple of weeks this potential challenge with a lot of the leadership, healthcare being one of them, which had been a nice relative performer, gained some nice traction in November into December, but starting to roll over, the RSI sloping downwards while the price is going higher. That tends to be what tops are made of. That's what tops tend to look like after the fact. When you look back, you have that lack of momentum going into the peak, and potentially that's what we're seeing now with any of those things. And you have the same thing from Apple, from Disney, from a lot of tech names as well. You have to look for some sort of breakdown that would confirm that as a negative sign. But at this point, it certainly should be on your watch list of potential issues. Let's look at a chart of the S&P 500. Then we're going to come back to the member dashboard and look at some of the particular information. So here we have that similar concept on the S&P 500. Here's today again. About 2:15 p.m. Eastern, we're recording this. So, we're continuing to move higher, but we see this non-confirmation. Every time the price goes higher, we have lower peaks in the RSI. That is not 100% of the time that you get a sell-off, but more often than not, that's very indicative of negative momentum, of more distribution than accumulation. There's less momentum every time the market's pushing higher. This comes after Friday, where we had a rare bearish engulfing pattern from the S&P 500. And what that usually suggests is some weakness over the next couple of bars. We've had some strength today. We really haven't closed above that pattern just yet. So it's telling you, potentially some weakness based on Friday's trading today. Obviously, we were holding up just fine. And again, the leadership coming from some of the familiar places, from tech in particular. In terms of other indexes and what we're seeing, the S&P 500 obviously in a position of strength here. We have small caps and mid caps up even more. And we're going to talk later, I think part of the 3 and 3, if I remember right, I picked out some of the cap tier charts that are going to show you that relationship. We haven't really had the participation of small and mid caps. That seems to be not the case today. You actually are seeing some leadership from small and mid caps, which is more in line with a healthy bull market pattern. So kind of an interesting phenomenon there. In terms of other movements, I think it's always worth noting when a huge benchmark name is at the top of the scooter reports. And here's why. As we've talked about on the show before, when a stock like Apple, a huge benchmark name, anyone trying to outperform the S&P 500 really should be on the right side of Apple, or it's a very difficult thing to do. When that is the #1 stock out of the whole large cap universe for the scooter rankings, that tells you that is a name that most large investors have to be in because it's so strong and it's such a big weight in their benchmark. So, it's suggesting it's sort of a feedback loop. The stronger Apple is, the more big institutions have to be there. That provides further strength. And then the stronger it is, the more people have to be there, et cetera, et cetera, et cetera. So interesting to note that, again, it's a very tech and semiconductor oriented top 10 with a number of names that you're probably familiar with. Some other ones peppered in. So you have APA, Apache Corp, you have BMY, Bristol Myers within healthcare. So some other names, but very, very technology centric. If and when that starts to change, when you see other stocks bubble into the top 10, that would be one of the many signals that maybe that the leadership is changing. There's a bit of a rotation. In terms of ETFs and what we're seeing globally, a lot of strength from China-oriented ETFs. So this is the MCHI, which we'll look at here. Again, there are a number of ways to look at China. We recorded a week or two ago, if I remember right, looking at ETFs, talking about the different Chinese ETFs. Check that out on YouTube if you missed it. But you have a lot of big moves higher in the Chinese ETFs going into today, and that's gap ups on a lot of the ETF charts, showing you a lot of strength in there. And this is an area where it's been a little questionable, and the real question has been, is something like the MCHI able to get above the peaks from earlier last year, from something like April, May period, where we had a lot of strength coming out of the first quarter. And at this point, you're certainly seeing the follow through that would suggest some nice strength. So the top performers all in Asia, with China, Taiwan, Hong Kong, South Korea at the very, very top of it. At the bottom, you have frontier markets, and you have some developed Europe like Germany, United Kingdom, and so forth. So really leaning towards Asia, leaning towards developing Asia, to be honest with you. In terms of industry themes, we've got some interesting charts on here. Coal, actually #1. This one's a tough one. I hesitate to get too excited about this because you're coming from such a depressed point with something like the chart of coal. It's really been range bound. You can see on the little preview chart, it's been very, very choppy. So not my favorite chart. I am very interested in the fact that some of the materials groups like non-ferrous metals actually breaking to new highs. This is why materials is one of the strongest sectors today. It's actually pretty unusual. It's not been the case for a while here. And then you're seeing consistent strength from automobiles. And this is the traditional auto sector, but also things like Tesla and others that are sort of in there. So some interesting groups at the top of the performance list today. Looking at the bottom, you have some healthcare groups. Interesting for me to know, biotech is one of the groups at the bottom. These are one of the bottom performers today, second worst, and you can see a bit of distribution here. So the biotech group hitting resistance around 2,200 on this chart of the Dow industry group. Breaking down again, you're okay as long as you remain above the last swing low, you remain above the 50-day moving average. But biotech has been a group we've been pretty excited about because it's been a nice sort of performer, a nice rally going into November. But look at how the relative strength has turned down, and look at this divergence with higher highs in price, but consistent lower peaks in the RSI. And this is why, to be honest with you, one of the consistent themes you've probably seen on some of these charts, I find it very difficult to expect extended upside when you have all of these divergences. And if and when you get some sort of validation, when charts like biotech might be a really good one to watch, or maybe the IBB or something like that, when you break down below a swing low, might confirm that divergence that you've had from a lot of the momentum indicators that we've been looking at. So that is our market recap for today on January 13th. looking at all those different patterns. So now what we're going to do is go to the next segment called the Final Bar Library. This is one of my favorite segments because we talked as a production team about how we can best use the time on the Final Bar. One of the things we talked about was just drawing on some of the best written commentary, written content on the financial markets, the financial industry over time. I've got a library that I've built up over decades, and the goal is to pick out some of the things that I've read and share with you some of the insights, and again, hopefully help you tie it into how you should be thinking of the markets now, how you should be relating it to your own investment process. So today we're actually going to be talking about this book, The Dow Jones Averages. It's by a author named Bennett Goodspeed. This was actually written in the early 1980s. That's when it was published. So it's a little dated in terms of the content, but I think some of the investment lessons, the lessons of the industry, and talking about the challenges of money management and how to outperform, I think are very, very relevant to today. And I'll try to connect, the early 1980s to the early 2010s here, 2020s, and make it relevant to where we're at today. So what Bennett Goodspeed talks about in the book is essentially the yin and yang of investing, and it's called the Dow Jones Averages because it teases to Taoist philosophy and that balance of two opposing forces. So with the yin and yang, it hits in a couple ways. One is the art versus science of investing, and often, I've run into this as a technical analyst, thinking about the artistic side, looking at patterns, looking at investor behavior and sentiment, versus the science, looking at more statistical measures of investor performance and investor behavior, and that balance of the two. And I do think a balance is pretty important. But he talks a lot about that balance. And when he, particularly at the beginning, he talks about why it's so challenging for investment professionals to outperform, to do well consistently. And his comments is that they are, quote, victims of their own methodology. He basically says that to be a good investor, a whole-brained investor, balancing the left brain detail side with the right brain analytical side, you need to be using both sides of it. What happens in the financial industry is when you get started, you are often very focused on the left brain orientation, very detail oriented, looking at specifics. And the right brain orientation is what you need when you start managing money, when you're a portfolio manager. Because the left brain analytical side, when you're analyzing a company, it's all about modeling, it's all about looking at the numbers, it's all about rolling that up into an investment thesis, but it is deep into the weeds on a particular company. It's looking at details. A portfolio manager can't get too caught up in the details. They have to be looking more broadly at all of the different themes and how different markets relate to each other, looking at market history, thinking about, projecting patterns going forward, what industries and what companies and what models will be able to thrive and survive in the future. And so it's much more of a right brain creative thinking process, to be honest with you. And his comment is a lot of people do not make that transition very well. They're very, very good analytically, but they have difficulty thinking about the big picture. And to be honest, I've often found that technical analysis is a great way to understand the big picture because it's so scalable. You can look at so many different companies, industries, regions, different types of stocks using a consistent toolkit. They quote Edward Johnson II, who's the founder of Fidelity, the first portfolio manager, and I obviously used to work for his son, Edward Johnson III, who was the chairman when I was at Fidelity. But his quote from Mr. Johnson was, "I have been absorbed and immersed since 1924 in the market, and I know this is no science. It is an art form. It is a personal intuition, sensing patterns of behavior. And my challenge to all of you is, what better way of sensing patterns of behavior than with charts, right? It is a great way to quantify investor thinking and get inside the head of other investors. Looking at a balance sheet or a 10Q or some sort, you're not going to get inside the head of anyone. You're just looking at the details of the company. I have found that stock performance is based on what people think and feel about the fundamental data, and that's why we use the toolkit to try to understand it. So a lot of his writing gets back to that idea of whole brain investing, balancing the more analytical with the more soft and creative, more pattern oriented. After that discussion, he gets into a lot of other things that I want to just touch on very quickly to finish off the library here. Number one, he talked about the illusion of certainty, which I thought was such a great phrase. I often talk behaviorally about the illusion of control, right? This illusion that you can control what a stock does. You can will it to go up when it's something that you own, or you can prevent it from going down by sheer will when you don't want that to happen. But there's an illusion of certainty. And I think, and again, this was written in 1982, 83, before computing power was really a thing and before it was widespread in the financial industry. But he talks in the time about this illusion of certainty, and you feel like you can quantify and model things that are not truly quantifiable. And I think that is super relevant to today when so many institutions are very focused on building up a quantitative effort, looking at quantitative analytics, trying to quantify everything, looking at statistical measurements of whatever they can, even trying to look at big data and quantify non-quantifiable things, sort of soft data, and putting it, or unstructured data, and sort of putting it into a way that they can test and back test and create models. And I think we run into trouble as investors when we rely on a model too much. Models are not reality, they are a model. And anytime you make a model, you have to make certain assumptions about what's going to happen next. You have to, because you cannot predict the future. So at some point, the model will fall apart, and that has happened. There's so many examples in history. Long-term capital management, obviously a very widely known example, but there are many others as well. So again, there's an illusion of certainty that you want to minimize. I've always found investing is not about certainties, it's about probabilities. On backtesting, he said, and I quote, "Avoid the Pied Piper. Just because someone has been right 7 times in a row is no guarantee that number 8 will work out. When he is finally wrong, the size of the herd will be at its maximum, just as it plunges over the cliff and into the sea." Isn't that a great way to illustrate that challenge? But again, if you look online, look on Twitter, you will find plenty of people on LinkedIn, plenty of people with a computer that are creating backtests and publishing the results and saying, "Look, I've created this system that outperforms by 50% a year." I will tell you, and someone jokingly once said, "I've never met a backtest I didn't like." Backtests tend to look pretty good because you can find a way to analyze history and come up with something that worked, but there's literally zero guarantee that that is going to work tomorrow or any day after that. And that is one of the challenges we run into, this illusion of certainty that a backtest means it's going to work going forward. It often does not. On relating cause versus effect, he said, and I quote, "Just because the stock market went up 80% of the time after the Mets won a doubleheader doesn't mean it will go up next time. Try not to confuse chance with cause and effect." I recently went through the entire West Wings. I've been going on Netflix and trying to binge watch old West Wing episodes. And there's an episode called Post Hoc Ergo Propter Hoc, which you should watch if you haven't seen it. Essentially in Latin means after something, therefore because of something. And remember, in investing, we love to do that. We love to see two things that happen next to one another and assume that there's a cause-effect relationship when often it is not. And I have certainly found with technical analysis, a lot of people have spurious relationships that they find where two patterns seem to line up or two things seem to happen at a similar time, and you assume that that has predictive nature, predictive ability. It usually does not. On being patient, he said, quote, "Making money in the market is not like making bread. You don't need the dough to make it rise," which was a great comment. I found a lot of people when they talk about investing, they think investing means action, right? To invest means you take action, you do something, you make a trade or you change. And to be honest with you, I have learned over my career is that investing, if you're doing it right, should be pretty boring a lot of the time. You shouldn't be doing things a lot of the time. And often if you get out of your own way, you don't churn things around just to move them. You just are patient and look for longer term patterns. You're going to be on the right side more than you're not. On procrastination and decision making, he said, quote, "Failure to decide is in effect a decision." I've often worked with clients about decision making and their decision making process, how to have a thoughtful, deliberate way, intentional way of coming to a decision by gathering evidence, coming up and creating the mosaic, and then making a decision. It's funny though, a lot of times we get this analysis paralysis, and it's so easy with all the information we all have access to. Even as individual investors, you have access to so much information that investors even 10, 20, 30 years ago wouldn't have dreamed of. So how do you balance all that? You have to have a consistent, disciplined way that you make a decision. So when I'm coaching technical analysis to new investors or students, I often give them a checklist, and this is a series of technical questions you need to answer. And at the very end, you have then earned the right to make a buy-sell decision. Often we love to cut the corners and look at a little bit of information or hear something and make a decision, and that is not a great way to do it. But failing to decide, if you have so much information, if you don't have a good process and you don't make a decision, you are in effect making a decision to not take action. So make sure you have a disciplined process and follow it consistently. On the role of technical analysis, he said, and I quote, "In effect, investing is often a two-part function. Feelings tend to precede logic, so that the intuitive right side often develops the question while the left side supplies the answers." I've often reminded investors that technical analysis doesn't always provide the answer. Just because the chart says something doesn't mean you necessarily need to make a buy-sell decision. That's not the only value of technical analysis. I find a lot of times, especially from more fundamentally oriented investors, technical analysis can help you decide what question, help you point you to the right questions to be asking. So instead of worrying about, the chart says X, so I should do Y, a lot of times the charts and the movements, the inflection points, the what's working and what's not, will help lead you back to a more detailed process of determining whether or not you want to be in a certain stock at a certain time. So it doesn't always provide the answers. Technical analysis often can provide the right questions. And very finally, Adam Smith in The Money Game, he was quoted in the book, and he said, if you don't know who you are, the stock market is an expensive place to find out. Isn't that the truth? So ladies and gentlemen, that is the segment called The Final Bar Library, where we break down the Dow Jones averages by Bennett Goodspeed. We're going to take a brief commercial break. We'll be back after that. Thank you. Hey everyone, welcome back. Dave Keller here with the Final Bar on StockCharts TV. Thanks for joining me every weekday after the close. Please keep your questions and your feedback coming. The Final Bar at StockCharts.com is the best way to get a hold of us. We are going to move on to our next segment called Pro Tip. And the idea with the Pro Tip is to share with you parts of the StockCharts platform, how to think about them, how to use them. And we are going to look today at the member dashboard. This is one of the pages that I find is really, really helpful because to be honest with you, when I first started using StockCharts years ago, really didn't have this as an option, and so I got very comfortable using the market summary page as my main thing. And even up until maybe a year ago, I was still using the market summary page first thing every day. That was my go-to. As we've improved this page on StockCharts.com, I found this has ended up replacing the market summary page for me. And this is the first thing that I look at. This is the main page that I have in front of me during the trading day. And it's certainly what I use to prepare for the show every day. So what I wanted to do is just share with you how I have mine configured and maybe give you some ideas about how you can have your own member dashboard page set up. So again, to get to it, just click on your dashboard once you log into StockCharts.com. And one thing that you want to make sure that you do at the top here, it's just going to tell you some basic stuff. On the far right, upper right corner, there are these gears. And some of you often will not have these checked off. I would argue check all of these off. You can remove them later if they just get in the way, but I bet they're probably going to be pretty helpful. So all of these things are going to allow your screen to look a lot more like mine. So as you go through, and then just make sure you click on Save Preferences. That'll have it all ready for you. So the way that I use this in the upper left, this is the way that you can drill into all the different member tools. There's some things that I tend to refer to in here, things like the industry summary, the scooter reports is how I often will get to them in the upper left. The market overview page has become a go-to for me because that's a great way to just very quickly identify what's working relative to other things. So I've been very focused on large versus mid versus small cap, and this is a great way visually to just jump through the charts and see how they've done over the last couple of days and just see what's up, what's down, or something like the VIX, seeing where it is relative to the 20 level or the 12 level or whatever. Great way to do it very quickly. And also remember, you have bonds, commodities, and cryptos on here as well. So it's a great way to look at other asset classes and how they relate to stocks. In the upper right is the sector summary page. That's how I have this set up. And so I'm looking at the 11 S&P sectors. My main process is to start at the overview and then go to the sector summary page. And I do that because it's sorted on percent change and I can see what's working and what isn't just today based on today's trading. So it's a really great, very simple look at each. And then you can obviously click through each one of these to get a little further. Also note, a lot of people don't miss this, or miss this visually, but for example, you can click on RRG, go right to a relative rotation graph of those 11 S&P sectors. So remember, it's a great way to sort of jump into some of the different things. Also remember, on the upper right where it says more, you can customize a lot of these objects and make it something different. But again, my goal here is to show you how I have my page set up just to sort of nudge your thinking. The next segment down, I look at the scooter reports. These are our StockCharts technical ratings. It's a proprietary trend following system based on price momentum. It looks at long-term, medium-term, and short-term with more of a weight toward the long-term, but also some short-term weighting. If you look at the Chart School article on the scooter rankings, you get all the details on what we've done. We share with you the formulas and everything. But I orient it this way. I have the top 10 stocks in the large cap universe. Then I have the top up and the top down. These refresh during the day, so you will always get during the trading day what stocks are moving the most based on that rating system and what are moving down the most. So it is a beautiful way to understand what themes are sort of emerging, especially on a big earnings week like we have this week with a lot of the banks. You have like Delta Airlines reporting tomorrow. This is a great way to just see, are those stocks reacting to earnings and moving in a way that's really legitimately changing their ranking? Are they moving up or down a lot more or less than other stocks in that same bucket? This is a great way to do it. I love to use little previews and then click into the charts by just clicking on the ticker and looking at them in more detail. So I look at the top 10 stocks, the top 10 up movers, and the bottom 10 movers each day. Then you have the ability to put two different chart lists. And so what I've done is I've set up chart lists for global equity ETFs. This is one of the lists I look at all the time. And I can sort it based on what's up and what's down the most in our market recap segment. I use this part of it. And then this is one of my favorite things I did. I set up an industry chart list. So I set up a chart list of all the Dow industry groups, and I put the tickers for the different sectors. So HLTH for healthcare, comms for communication services. So I can see what's up and what's down. I can see the sectors. I can see the industry listing, and I can click on the title to go into to the charts. Beyond that, I'm looking at my scans, my alerts. This is pretty consistent. StockCharts TV can be right in here. Also with fantastic articles like Dave on the Mindful Investor. It'll pop up here on the articles tab as well, along with all my other contributors, John Murphy, Julius, Tom, Milan, others. So you can see all of their posts and go right to the articles page. So a lot of the rest of this is sort of customizable on your own, but I did want to point out I found a lot of people don't take the time to set up this page at the very top. I would encourage you to do so because it makes life a lot easier as you're using StockCharts.com. Ladies and gentlemen, we need to wrap up the show by going to the 3 in 3. 3 charts in 3 minutes. If these are not on your radar yet, they should be as of this moment. We're going to go very quickly through these 3. The first one is looking at cap tiers. So we have the S&P 500 in black. In red, we have mid caps. Green, we have small caps. Purple, we have micro caps. This is going back to the last, actually through the December 25th low. It's the low from the end of 2018, and looking at the performance, that's what the numbers are telling you. But I wanted to just focus on this far right side, because you can see in the last 4 to 6 weeks, the S&P 500 large caps have continued in a position of strength. You have mid caps that have sort of tapered off. You have small and mid caps that are sloping downward. So there's a bit of a divergence here between the largest companies, the mid and small cap stocks. So that's the first chart I'm looking at. If that divergence continues, speaks to some inherent weakness under the hood, some of the stocks that might not be affecting the value of the indexes themselves. The second chart of the 3 in 3 is looking at breadth for those cap tiers. So here we have the breadth on the S&P 500. We have the breadth for the mid cap index and the small cap index. And you can see as you go down the list, the further down you get, the more that these lines are pointing down. It sort of agrees with what we saw on the last chart, where you're seeing some weakness with the smaller mid cap companies relative to the large cap. So the large cap breadth line continuing to slope upwards, these breadth lines starting to slope downwards. Now, again, there have been plenty of times where that has happened. September comes to mind, but the market has continued upwards. So again, it's not telling you that there's a top, but I like understanding that relationship. And if you see more distribution in the more speculative names of the small cap side of the universe, might tell you something to be a little concerned about. See if that plays out. The third chart in the 3 in 3 is the small cap relative to large. We have a real small cap cap tier theme to the 3 in 3 today. And this is the relative performance of the IWM, that's the Russell 2000 ETF, versus the S&P 500, the spiders. And as you can see, this is rotating lower once again. So you had this, potential bottoming pattern. You had this feeling that these things are sort of bottoming out. There's this, end to the underperformance. But now in the last 2 to 3 weeks, you've seen this more rotation back lower, with the IWM underperforming the S&P 500, and going into the new year, the same case. If we make a new relative low, which would be below the lows of September and October, I think that might be an issue, right? And again, you've had underperformance through a lot of last year. That's totally fair. And that might be okay in the short term, but again, in the long term, that tells you that there's inherent weakness. I'm always looking for things that might tell me there's an issue before the broad market tells me that there's an issue. And ladies and gentlemen, that is our show for today on a snowy Monday here in Redmond, Washington. Thanks so much for being patient. Thanks for accepting the view here in my home office. Hope you enjoyed the show today. Please keep your questions and your feedback coming. The final bar at StockCharts.com is the best way to get a hold of us. For StockCharts in Redmond, Washington, I'm Dave Keller. Have a great day.